This is our Forex blog for July 26, 2012, and like most days we use our currency meter as the first step of our three-step easy Forex trading system. Find the statistically strongest currencies and buy those versus the weakest ones. Sell the weakest ones if they're the ones on the top, like the euro is always on top. If the euro is weak and the dollar is strong, then you want to sell it. The dollar is on top in some pairs and on the bottom in others. The yen's always on the bottom and the euro is always on the top. So anyway, this is our currency meter, which shows the real-time strength or weakness on the top. Underneath that's the 15-minute trend, hourly trend, daily, weekly, monthly. Obviously, it's common sense that the more time frame trends that are either going up or down, the better your odds. Like you can see, the dollar is down on all time frames from around 7 o'clock onward, and it was extremely weak on all time frames except for the weekly and monthly trend before that. The yen is also one of the weaker ones. And this is our sortable currency meter, which means you can basically sort it. I have it set for the hourly trend, and it'll automatically put the strongest ones on the top. You're always, right now the strongest one on the hourly trend is the New Zealand, then the pound, then the Swiss, then the euro, and the weakest one is the yen, then the dollar, and so forth. So basically today, pretty easy trading. Super strong euro, pound, New Zealand. The Swiss and the euro right now are pegged together. So when the euro goes up, the Swiss goes up. When the Swiss, when the euro goes down, the Swiss goes down. So you can, pretty much substitute the Swiss for euro pairs if you'd rather trade by buying the pound Swiss. Maybe it's near a pivot level that's good support. You can do that, but they are pegged together. So you'll see that those always go up and down together. Right now, they may change. Switzerland may change that policy in the future, but as of now, that's the case. So, first step, buy the strongest versus the weak. The New Zealand, very strong today. The pound, incredibly strong. And earlier, it was even, stronger than the New Zealand, pretty much from 7:30 onward. So let's look at that. Pound dollar and pound yen. Now let me hit the minus key and zoom out a little bit. Or actually, let me scroll back so we can go over this currency. When it's above the hourly, it's more likely to go up. When it's underneath the hourly, it's more likely to go down. Most days, you'll find our green 3.0 containment band, which looks at the maximum volatility over the last 20 days, as the absolute high. Most days, probably 90–95% of days, when it gets 2 or maybe 5 to 15 pips above there, that's the high of the day, and then it goes down the rest of the day. Today's trend was incredibly strong, and the trend just kept going and going and going. Basically, you want to look at our real-time trend tools. If you have this kind of incredible trend, way over the 80 on most of the bars, and you get a pullback like this that doesn't have that much weakness, obviously you want to get back in the trend. One way that you can do that is using our new tool, which we're going to release Monday or Tuesday next week. This uses digital signal processing technology. And basically it takes a much faster reading of current prices. You could use, for example, maybe a 10-period pullback. Let's just make this line 2 thickness. That uses fast digital signal processing techniques to measure the trend and allows you to get in on a pullback with minimal risk. If just for comparison purposes, I'll put a white simple moving average on here, and you can see how much faster this one is than the moving average. And this is a 10 period, which is obviously quite fast to begin with. But you can see the DSP one hugs price. You get into this trade right here, and it takes off. If you get a pullback where it's underneath that fast digital signal processing line for 3 to 5 bars, and then when it goes back above it, that's typically a pretty high probability place to get in. When it's above the upper green band, 90 to 95% of the days, you do not want to be looking to get into these trades because most of the time that's the end of the move. But today was one of those outlier days, which behaves differently than the vast majority of days. But I'm just showing one method that you could use to get into that. Let's look at some of the other trades you would have had today. Obviously, the pound was very strong at that time. The euro also was strong. The yen was extremely weak. However, the yen's weekly and monthly trend are still up, whereas the dollars, really did not have that much statistical strength at the time. So again, you could have bought the pound yen as well, and you can see this one also pretty much exploded up all day. You know, this is a good example of one of those pullbacks that you can get into when currencies aren't above the upper green band, or FX trade signals give some buy signals. These are all chart-based patterns. They do not use these statistical tools, which, you know, obviously these trend or counter trend signals here are ignoring the real-time momentum. That's why you always want to watch this on a live chart with the real-time momentum. This pullback is a no-brainer, and you can see it went from 121.75 up to, you know, about 40, 65 pip move. And if you use our trailing stop, it got you out right here at 21. Very big move. And when the market is this strong, you know, I wouldn't buy this pullback here. I'd kind of wait for it to run out of steam and pull back a little bit, and then buy here for a small profit. It went sideways right here. When it takes off again, get in. Maybe you would have made 15 or 20 pips on that. But be very careful when it's above or upper bands. It's very risky. Most days, you know, there's not going to be much more potential profit. 5 to 15, maybe 20 pips. Most days is all you're going to get. So days like this, you know, the trend sometimes can shoot up another 30 to 50 pips. The Australian was strong on almost all time frames from around 5:30 to 6:30, and so you could have bought the Australian dollar or Australian yen. I personally myself try to pick currencies that are strong and weak on all time frames. So the dollar has less strength on the weekly and monthly trend than the yen. So even though it's slightly less strong real time than the yen, I personally choose it, you know, just because it's a little bit higher probability. You don't always make the same number of pips. Sometimes if you bought the Australian dollar, you might make 25 pips, whereas if you bought the Australian yen, because it tends to be a little bit more volatile, you might make 40 pips. But you know, I try to shoot for as high a winning percentage as possible. One that, you know, if I'm wrong, I tend to lose less amount of pips on, and that's just my own personal preference. But you know, if you're shooting for the maximum number of pips and you don't care about winning percentage, then always pick the strongest versus the weak, and ignore the longer time frames. You know, because the weekly and monthly trend can take quite a long time to switch trends. So let's take a look at the Australian dollar, especially from 5:30 to 6:30. You can see that this currency was above the hourly moving average. It pulled back down here to the hourly moving average. It also happened to be the 10-day moving average as well. This is what's called a confluence, a support resistance. Anytime you have, you know, two or more, you know, very key high probability support areas or resistance areas within a 5 to 15 pip range, it's an excellent place to get into a trade. You can see the weekly pivot and previous day's high are also resistance areas right here, and the market stalled from 6:10 to about 6:15. Stalled about 5 minutes there, which is not that bad. But you can see earlier in the day, it had a real hard time getting through that level. There was major selling at the weekly pivot and also selling at the previous day's high. The whole and half numbers also tend to be support resistance, so traders know that there's oftentimes big sell orders at the 50 level coming up to it from underneath. So the 50 level, the weekly pivot, and the previous day's high are three areas of resistance, all in a 13 pip, you know, range from each other. But notice the off-the-chart strength right here. That's a trend that's very likely to go up. And again, you can use our new FX digital signal processing filtering, which is in our new moving average indicator. This is going to come out, and you can use a 10 period or 20. 20 is fast as well. You want to uncheck exponential. And notice, you know, you get a decent pullback right here when it's underneath that, you know, it makes a decent number of pip pullback down. The trend is clearly up. All the time frames are up except the weekly. This one does fall back with a little bit of weakness right here. Then it's kind of going sideways. So you don't always have to buy when it goes right above the hourly, the digital signal processing moving average. And when it kind of goes above it and goes sideways like this and the strength returns, even though it's not that strong, buying the breakout right here is a pretty high probability, and it just takes off. And notice the fast digital signal processing is very quick and tends to catch up to our trailing stop as well. You can also use it as a place to get out, which is very similar to our trailing stop. Let's scroll back and look at some yesterday. Explosive move up, pulls back a decent amount, going sideways. You know, you might have got into a trade here where you had a loss. You have another pullback down. You get in right here, and you can see it went from 0302, maybe you got out here when it broke the moving average, you made 17 pips. So again, don't be too afraid of losing trades. If you lose 8 pips and then make 15, guess what? You're up 7 pips. If you lose 5 pips and then make 15, you're up 10. If you lose 5 pips or 8 pips and then make 15 and then make 30, you've had one heck of a great day. So don't worry about whether one trade is going to work or not. And obviously trade during the most active times, 3 o'clock in the morning until about 11, 11:30. So I wouldn't have bought this trade here, but when this one pulled back here and went above it, you could give that a shot. Maybe you're scalping, taking 10, 15 pips. If you get into a trade and it breaks out and goes up and stalls, again, the 3.0 green band most days is the maximum profit you're going to make. Now, since we're about to release a new version of the software, let me showcase how this digital signal processing technique works with some of our other tools. Because it uses a much faster way of keeping up with price, we've put this into the containment bands where you have the new option for digital signal processing line. Let's just say you put a 15-minute band on here. I just want to highlight what the regular one looks like and compare it to the faster digital signal processing. We'll change the center line to white and the max bands to yellow. And we'll click DSP center line. And if you notice, the DSP catches up to price much quicker. In fact, it hits it right here at 9:45 versus 11:45. 2 whole hours quicker. And obviously, on explosive days like this, it can shoot outside the bands. But once it comes back into the price range and price slows down, these, much faster bands allow you to, get short pretty much at the optimal time right here. And you might have also taken a trade right here and made 15, 20 pips selling that as well. Most of the time, when the market's not explosive, you're going to find these much faster bands. Notice the yellow band, which is the DSP one. Found there. The market went a little bit above there. It ran out of steam here. Touched it, ran out of steam, pulled back. Touched it, ran out of steam, pulled back. It is, right here, 48 to 66. It's 18 pips higher. And a lot of times when you have strong trends, it pulls back and hits the lower containment band here, and it doesn't have enough weakness to come down and hit the much slower containment bands that we've had in the past. Notice this one's at a lower price point, allowing you to bottom fish and buy the bottom without having to even scale in, and it goes up. Found the bottom, found the bottom, found the high, found the high, found the high here. The other one was significantly above there. And, these are quick little 10, 15 pip moves in the opposite direction that scalpers, thrive on. Now, this one was a little bit early. The price went underneath there, which is going to happen. It's impossible not to because these are based on statistics. And every once in a while, price makes an extremely explosive move, and it goes beyond, what is normal. Now, but a lot of scalpers are also going to really like using this on a 5-minute time frame as well. I'm going to remove the 15-minute slower old style containment bands that we have. And notice how, especially once price catches back into this, you look to sell here. The trend was very strong. This is a pretty high probability place to buy. And usually after the first wave, second wave, it tries to go up again. A good place to get short right there. Notice how it found the lows right here. Most days you're going to see this thing just chainsaws the price. Obviously this is the beginning of a new trend. You definitely want to buy the lower band because the trend's up. Buy the lower band here, touches the lower band here. If all you do is find explosive thrust-based moves and then buy the pullback, you're good to go. Good to go, good to go. And obviously because the market no longer made a higher high right here. And this is where the more you know, the better you do. A lot of traders don't want to spend 3 months to 6 months and hundreds of hours studying and learning support resistance, Fibonacci's, all the different aspects of trading. But the more you know, the more you're going to, take good trades and avoid bad trades that new traders that quite honestly are just lazy don't take. For example, Fibonacci profit target hit the 1.618. It's outside the bands. We know how much faster these bands are than the older ones, significantly. Great trade. Great trade. 2 counter trend trades that, on this explosive day up here a few days ago, allowed you to get short and ride it down. Now another tool that we have, also enhanced, I'm going to remove the containment bands with the new digital signal processing center line, is our FX power index. This measures the percentage of currencies going up or down, and we have the new option there of DSP moving average, which again is much faster at identifying new trends. I'll showcase it here. This will allow you to get into new trends earlier. Notice up here at the high today in the euro dollar, it started to show some weakness here, whereas this one was still strong. It was right here at 1035. It shows extreme weakness. It takes it all the way over to 1255 to show extreme weakness on a much slower power index. Also notice, you know, when the market's coming down right here, there's not very much weakness. There's a very small percentage of euro-dollar pairs trending down and dollar pairs going up, whereas this shows a much weaker picture. You know, you might not have considered buying this breakout right there, but now you do. Let's take a look at some of the other ones, like pound dollar today and pound yen, which were some of the stronger pairs. Notice as this thing's kind of going up right here, there's not that much strength on the old one. The faster one shows quite a high percentage of pound pairs going up, dollar pairs going down on a much faster digital signal processing, you know, which allows you to more confidence in buying this breakout. You want to be in currencies that have the vast majority of pound pairs going up and dollar pairs going down. It's just flat out faster. And in fact, you know, with the synthetic ones like pound by itself, notice, you know, this bar right here, 3 in the morning, quite a high percentage of them going up. Now this is showing the euro dollar here. You can ignore that. This is a synthetic pair just analyzing the pound. But, you know, it tends to be much quicker at identifying new trends. As you can see, a little bit of mild strength right here, and there was none on the other one.